Hey, people of the great market. In the next 7 minutes, I will explain the impact of the war on the Forex market with different key points. Picture this. Oil prices just spiked over 7 to 10% in a single day. The US dollar is surging as a safe haven, and your favorite Forex pairs are swinging wildly because of the escalating Iran-Israel war led by Benjamin Netanyahu. If you're trading right now in March 2026, this could make or break your week. Stay tuned because I'm breaking it down simply and clearly so you can protect your trades. First key point. Oil is the big driver here. The US and Israel launched major strikes on Iran starting February 28, 2026, killing Supreme Leader Ayatollah Ali Khamenei and hitting nuclear sites, missiles, and leadership. Iran hit back hard with missiles and drones targeting Israel, US bases, and even Gulf energy spots. The Strait of Hormuz, where a huge chunk of world oil flows, saw disruptions and ships halting. That's why Brent crude jumped to around $78 to $80 a barrel, and WTI climbed near 73. Higher oil means inflation fears rise fast, especially for oil importing countries. This leads to our second key point. The US dollar strengthens big time. Traders rush to safe haven assets during geopolitical chaos like this Benjamin Netanyahu-led Iran war. The dollar index is up sharply, boosted by higher oil, since the US exports energy, and general fear. Euro USD dropped below 1.17, GBP USD fell toward yearly lows, and risk currencies like emerging market ones are getting hammered. The euro and pound suffer because Europe relies heavily on imported energy. Higher oil hits their growth and pushes inflation up. Third key point. Safe havens win while risk assets lose. Gold surged toward $5,400 as tensions spiked, and the Swiss franc gained too. But equities tanked, with stocks sliding on worries about prolonged conflict. In Forex, this means pairs like USD JPY rise as the yen weakens slightly on risk-off flows, while commodity currencies like CAD or NOK face pressure if oil volatility continues. Benjamin Netanyahu vows more strikes on Tehran to destroy threats once and for all, which keeps uncertainty high. Fourth key point. How long will this last? President Trump said the campaign could run 4 to 5 weeks or longer if needed. Netanyahu calls it the fight he's hoped for over 40 years, aiming for regime change so Iranians can topple tyranny. If it stays limited and the strait reopens soon, oil could pull back, dollar strength eases, and Forex pairs rebound. But if Iran blocks Hormuz longer or hits more oil sites, prices could hit $100 plus, keeping the dollar strong and punishing Euro, GBP, and Asian currencies for months. Fifth key point. What about a real crash in Forex? Markets are volatile, but not crashing totally. Forex trades 24/5 no matter what. We've seen this before in Middle East flare-ups. Quick spikes in oil and dollar, then calm returns. Right now, in early March 2026, it's classic risk off. Dollar up, gold up, risk pairs down. But history shows these moves often fade unless the war spreads massively. Sixth key point. Trader tips to survive this Benjamin Netanyahu Iran war chaos. Cut your position sizes right now. Volatility is extreme. Focus on safe haven plays like long USD or gold-related crosses. Set tight stops and alerts on majors like Euro USD, GBP USD, and oil pairs. Watch oil prices hourly because every jump moves Forex. Don't panic sell at extremes. Many lost money doing that in past conflicts. Wait for oversold bounces when fear peaks. Seventh and final key point. The bigger picture for Forex traders. Benjamin Netanyahu and Trump are pushing hard to weaken Iran permanently, destroy missiles, navy, nuclear dreams, and proxies. If they succeed quickly, long-term Middle East risk drops, oil falls later, and global markets stabilize. But escalation risks remain high, with Hezbollah involved and retaliatory strikes flying. Markets hate this uncertainty, so expect choppy sessions ahead. There you have it. The real impact of this war on Forex, broken down in simple points. Oil spikes drive dollar strength, safe havens shine, and risk currencies suffer until clarity comes. Trade smart, manage risk, and stay updated. What do you think? Is the dollar headed even higher this week? Drop your trades or questions in the comments.